Hey traders, welcome to Charts and Coffee. There we go. Where is my screen? There we go. Happy Thursday, everybody. Options expiration Thursday. You'll notice I'm giving you a little glimpse of the daily notes that I send out to members. And the first note is caution, watch your step. And you'll see where, I don't know if you can see that, it might be a little small, but options expiration. All right, think of it as the gravitational pull. So price actions just pulled in, tractor beam style, right? But it's really gravitational pull of a black hole at thick call and put option interest rate, open interest strikes, right? So wherever you see lots of OI on both sides of a strike, heads up for that level. Open interest and volume gain, we always keep an eye on that. That's the sub-market sonar of what we do as traders. And so that is why. That is because at those levels, we have, of course, attention, we have commitment. And oftentimes, especially when it comes to options expiration, we have pain. So we want to be especially aware of today as a caution day, a day where things are not necessarily going to behave the way they usually do. That volatility can be different. The probability of our trade setups following through in that predictable manner are oftentimes going to be different. So we want to keep that in mind as we go into options expiration. All right, and I personally, if I have options that are expiring, and I close out a number of them, we had a number of them in the Sector Secrets Mastery, closing out things like Halliburton, CCJ, not CCJ, UNG, closing out a number of these calls. I like to do it by noon. So I don't want to really linger as the shenanigans continue on a day like today. All right. So as always, gang, and by the way, let me show you a couple of the things on these notes. Now, those of you that get the weekly notes, you're already aware of sort of the bigger picture, 40,000 foot view, sector analysis. That's my thing here at Simpler. The sector analysis, the macroeconomic view, what kinds of trends are on my radar. You're used to that in the weekly notes. That's sort of point us in the right direction for the week. And then the fine tuning, the specifics, getting more granular through the week is available in the notes. So you're getting a quick peek at the very beginning of the notes that I'm putting together here. We want to know our hot zones. And by the way, I want to give you at least a couple tactical things that I share with members. How do you trade on a caution day? Doesn't mean you don't have to trade, although for a lot of new members, especially day traders, I will say, observe some of these options expiration, non-farm payroll, FOMC days. Observe what they're like. How many times have y'all been to the amusement park, gone to Disney, whatever, and you take a look at some crazy ride that you're about to step into, whether it be a roller coaster or whatever craziness they have? You watch the ride, don't you? Kind of go, oh, right. You gauge it. You're gauging the am I going to throw up in this ride meter, right? For me, they're always pinned. I am horrified of roller coasters. I'll bungee jump. I have bungee jump, but please don't ever put me on a roller coaster. We want to be aware of what's going to happen with the ride. So watch a few of them first. Then if you decide to engage the market, especially as a day trader, really specifically as a day trader, on days like this, these caution days, half size, more conservative levels. Now, for my swing traders, for traders that are looking for the daily time frame triggers for price to close into those levels that we're watching, what's awesome there is we can use this volatility. So it's a very different experience depending on, which end of the time horizon and time frame, the time interval spectrum you are on. All right, so let's go ahead and jump into our questions. I'm going to actually use our toss charts today. So let's jump into those. And let's open up our daily time frame and jump into some questions. All right, let's do it. Pros and cons of options versus futures on the ES and NQ. So I don't know about pro and con, but let's talk about the reality of both, right, Chris? Cool question. Options. I am not a spreads trader. You know, what I do in the Sector Secrets Mastery, what I do in the options room or futures room, anywhere you see me, long calls, long puts. I do not do spreads. Cash account, don't have to worry about the pattern day trading rule, no shenanigans like that. I focus on that. So with that being said, there's a defined downside to long calls, long puts, and stocks, ETFs, and futures. I'm a big fan of long calls, long puts. So then the second thing is futures, leverage. Leverage is great. You know, you take, you know, for example, I think about, you know, my husband races our Shelby, and that car kind of scares me. There's a lot of horsepower. The feedback is very intense on the car, and for me, it's too much. Right? Leverage can kind of be like this race car. It's a little bit too much. Futures are great. I've been trading futures for a very, very long time. However, unless you're ready for that horsepower, unless you're ready for that feedback, that leverage, that horsepower can be very tricky. So as long as you can control risk, I think you're fine. It's easier to control risk with options, is always been my opinion. Again, long calls, long puts. I'm not talking about selling options, long calls, long puts. So as long as you're folks, that's really the big difference to me, Chris. That's really the big difference. So I like to do both. I want the traders that I get the honor to come across, to train, to mentor. I want you fluid and fluent in everything: Forex, futures, stocks, ETFs, options, heck, even crypto. I want you fluent and fluid in everything, being able to move in and out. And when you move in and out, you start to see the connectivity. And that's when, you know, trading really becomes, you see the whole playground, and you're not just spending your life on the seesaw. So that's the way I look at from a risk standpoint. Futures are riskier, not because they're a bad asset class, but because of the leverage. I'll say the same thing about Forex, you know. All right, next up, and thanks for the question, Chris. Next up, Julian, FXB. Yes, I've had my eye on that British pound for some time. I've been looking at the 6B. I'm a futures trader too. And then, yes, that FXB. The problem is, and Julian, last time I checked, it was still an issue. And that problem is, yeah, when I go out to the June 17, I'm taking a look at my platform here. There is no liquidity. It is just, just crickets and tumbleweeds. So is there a potential setup? Well, this is one thing I do remind our traders. Now, with a short sell, it's not going to help. And with $126 stock, it might be cost prohibitive. But many times we are playing inexpensive stocks to the long side. And some of our members say, well, Rog, if I don't want to buy the call, can I buy the underlying? Absolutely. But I do see a potential setup on 6B or on British pound, US dollar on the Forex side. But FXB is just too thin, Julian. Sometimes we wait to see as price closes in on the trigger, if the strike that's associated with it starts to increase in open interest and volume. Nothing so far. So that's probably going to be a pass. Thanks for the question. Hey there, Kim. Good morning. Would I look at TSM? Sure. All right. So TS. There we go. TSM. So Taiwan Semiconductor. Now remember, this is the number one weighted stock within the SMH. We always want to have a view of the boat and the tide. Back to TSM. Where would I look at getting in for a short? Oh, hang on. There it is. Where would I look at getting in for a short back into the wave or the upper Darvis? Well, it's double red. So really both. You know, how about we look at this as a zone aggressively that starts at 104.65 and extends all the way up to that Darvis. So, you know, since you're asking, then you also know that I scale in and scale out. It's an old school thing. It just seems to have fallen out of favor. We do it consistently. We scale into trades, aggro, moderate, conservative, and we scale out. As many of you know, we take our first target, we scale out of half the position, and then we scale out a quarter of our position as we continue to move higher. So, and then we use trailing stops, things like that. So scale in, scale out. I think that's the zone that I would scale in too, Kim. So yeah, focus on the wave and all the way up to that Darvis is perfectly fine. Now you might say, Rog, it's above the wave. That's fine because you can see that we have seen price pull itself up to 109.5 before. So let's at least keep that in mind. If not to scale in, at least to recognize where our point of validity for the trade may be. So good stuff. Good eye, Kim. Hey there, John. Chatter in the room is for a push for a few more days. Oh, I don't know. Chatter in the room is for a push. I don't know. Before it has I don't ever want to be, well, no, that's wrong. Here's what I will say, and you all know I talk about this often. I don't predict, I react. So if somebody wants to be out there looking at their crystal ball, right, and they say, this is what's going to happen, good for them. I've never had that superpower a day in my life as a trader. 32 plus years, my crystal ball has been in the shop. So anything that starts getting into a few more days of this, and then this is going to happen, I don't know. What are my thoughts on NQ, though? I can help you with that. We are below the 200. This is still a choppy market. We're inside the range. And if we're in chop, and I think a lot of you that are frequent flyers here at Charts and Coffee, caffeinating and dominating away, those of you are going to say, Rog, this is a choppy market. Is there clarity at the sector level? Is there clarity in any other market within, for example, in futures? I've said for a while, well, actually 2 weeks ago, there's a free video that I posted and I said, look, it's time to look at the short side. And I haven't really backed off that. I would not put content out there if I didn't believe that's what I'm going to do. So when you watch my free content and the premium content and see me in the room, I'm telling you what I'm doing. I'm not analyzing the market and saying, well, it could do this and it could do that. That's of no use to you and it's of no interest to me. So here's what I'll tell you. Find the weakness within NQ. It might be at the sector level. It might be at the individual stock level. I'll tell you how we're trading Starbucks. How's that? We're trading Starbucks. You might say, what does Starbucks have to do with the NASDAQ? XLK, XLC, XLY. Within consumer discretionary, which is a heavily weighted sector, within the NASDAQ, we've been shorting this thing. Find the clarity, John. So again, I don't know who's saying what. I really don't pay attention. I stay in my lane. I stay in my analysis. And that helps me. What I'll say is, with the same thing I say all the time, I'm a trendolorian, right? I'm looking for the trends. If you like a narrative, look at that index. If the clarity, and I mean specifically trending, clarity isn't there, exhaust the possibility that you have a trend in that narrative. And then if you don't, well, then you can look at choppy markets. But please, 2 things I will recommend. I'm not going to predict what the markets are going to do in a few days. Really? I have no clue. And here's a hint. Nobody else does either. And then the second part of it is, if I'm prioritizing a choppy market, I'm already dealing with all the uncertainty that comes with distribution, right? I'm already dealing with all the uncertainty that comes that back and forth. So that's my 2 cents, okay? I hope that helps, John. And again, if there's analysis ever that you say, Rog, but this analysis makes sense to me. Hey, I'm the first one to always say that's just what I do. And the most straightforward, straight up thing I can always share with you all is, this is my way. This is what's going to map to the alerts I send to you all and to the ideas that I send to you all via the free and premium videos. And that, I think, for each and every trader, is the best thing that we can share, just being as transparent about our process and our trades as possible, and not just sort of doing general analysis. I don't believe in that. Like I said, not of help to you and not of interest to me. All right, Battlehawk, how are you? I picked up some UUP. Okay, so that's the flip side of the FXB conversation we had earlier. That's the flip side of the FXE conversation that we've been having. So awesome. Picked up the 26 calls. Beautiful. Back in the wave. Awesome. I love it. I've scaled out twice. Magic words. Scalable mindset. I love it. Yesterday, we traced pretty close to the 4-day average of the low. What would be a good trailing stop? I would not put it any closer. As you mentioned, see those lows there? I wouldn't put it any closer than that. And then let me check the auto chartist. Oh yeah, I want to show you all a video. I want to show you all a video before you go. It cracked me up, and it's a really good analogy for trading. So let's see if I have some data on this. And I know I do. There it is. Okay. Don't trail it any closer than 11 cents. Wow, that's not much. So I like where you're at. Just below those lows is fine. Yeah. When we talk about trading, gang, I love this right here. This is my Instagram. So take a look at this. This is the definition of work smarter, not harder. You ever see these people in these spinning dollar machines, and they're kind of grasping at these dollar bills? Look at this. She's just putting her hands and letting the money come to her. Gang, that's what trading is. Let it come to. She's not chasing anything. This is not a momentum trader in here. And she is making bank. Look at that little box. She's letting literally the money come to her. I watch this because I think it's hilarious. And it really is, to me, a perfect visual of the kind of trading that I seek to do myself and share with you all. Oh my gosh, that is so great. All right. So yes, the perfectly random things that are on my Instagram. All right. So yeah, good eye on that one, Battlehawk. No closer than the lows, maybe even below the April 8 low. Maybe below the April 8 low. All right, Alan, I'd like to short TJ Maxx. Sure. So right back to consumer discretionary. I think this one's been thrown about quite a bit in the Sector Secrets Mastery Room. And I agree, it's been on the radar. The liquidity is pretty good in May. The liquidity is pretty darn. Let's see, where's the liquidity? Is there no liquidity in June? That doesn't look right. But there's good liquidity in May. There is good liquidity in May. So with that being said, probably something closer to the way that we were talking about using the Darvis when Kim had that question about TSM. I don't want to use the Darvis here, but this previous high in that area, I do like that. I do like that for sure in terms of 64.40, that area there as the validity, but anywhere inside the wave is fine. No, I take that back. It's not because take a look. Yellow, that is a neutral market. So no, we want to wait for that high, either March 29 or even the March 16 high. Overbought stochastic, and overbought slow stochastic would be awesome. Let's see if we can get to that high level, that 80 level, and that would be great. Now, as far as the tide goes, let's go to our multi-chart for a moment. So we talk about tides, we're talking about the weighting within the ETFs. Let's head on over to XLY. You'll take a look at why we shorted Starbucks, by the way. All right, double red. There's TJ Maxx. So when you say a strong tide, Alan, I'm not sure what you mean by that, though. So if we're talking about tides in the XLY, I'm not sure if you're looking at a different ETF where it's weighted. But no, I don't see a strong tide here, my friend. We're below the 200 propulsion. We're choppy at best. So I'm not really sure what you mean about the tide there, right? So maybe a follow-up question sometime soon about the clarity on that. All right. Okay, so gang, that's it. My time is up, and I will see you all in the futures room momentarily. My mastery folks, I'm going to get the notes out to you all. Futures folks, we're going to take a look at the markets this morning, see what is shaping up. And remember, gang, it's a caution day. Be careful. We're dealing with the post retail release and the post unemployment release. And we do have some Fed members later on today and University of Michigan consumer sentiment. at the top of the hour. So heads up for all that. As always, gang, great to see you all. We will not have a Charts and Coffee tomorrow, but I will see you on Sunday because the markets are open on Monday. We're going to prepare for the market Sunday evening. So I will send out our weekly notes. I will see you for our 6 p.m. Sunday Notes live show. But we're going to take the day off for Charts and Coffee tomorrow. All right. Have a wonderful, wonderful weekend, and I will see you Sunday.